In this presentation, we will discuss our second method for creating invoices and/or tracking accounts receivable in our cash basis bookkeeping project. For more accounting information and accounting courses, visit our website at accountinginstruction.info. That method will be to create a separate QuickBooks file, one that we're going to use solely for the creation of invoices and/or tracking accounts receivable. Reason being is that we want to keep the one file we have, which is on a cash basis, on a cash basis. And if we start entering invoices into it, we're going to have an issue where we could start duplicating things unless we're matching this up properly. In other words, if we start entering invoices, we're not on a cash basis anymore. We're going towards an accrual basis. And if we're not setting the system up to deal with that, it will cause problems. If we're just using QuickBooks in order to create invoices, then having another QuickBooks systems to do that works well. And it's free to do that because if we have the desktop version, then we don't have to pay any more to start a new company file. So if our goal is just to create invoices and/or just to track the accounts receivable or provide a schedule of the accounts receivable, the amounts due, not necessarily the payments that have been received, then creating another company file could work well for that objective. To do this, we're just going to start the QuickBooks file from scratch here. We're not going to open any prior QuickBooks file because what we're going to do is set up a new company file. Once QuickBooks is opened, it may go straight into a company. If it does so, you can close out of the company by going to File and then close the company file, close company. Or it might go to this page here. You don't actually even need to close the company file that you're in because we could just create a new company by selecting the File dropdown and it'll close up the company we're in as we go. Now we could create a new company file down here. I'm going to use the dropdown because again, that you can do that anytime. You can even do it if there is a company file open. We're going to create a new company file. Remember, we're not doing this because we have a new client. This is for the same client, but that client has requested us to help them create invoices in certain situations. So let's imagine we have a client here. Our client does guitar lessons and they also sell guitars from time to time. Possibly they have a situation where they're good with the guitar lessons. They can charge the client when they have guitar lessons and whatnot. But maybe they want a more formal process when they send the guitars. They want to have an invoice and they want to be able to track that invoice information. Something like that could be a situation where we say, okay, we can possibly help to create invoices in that situation and set up some type of system that will work even though we're using a cash basis system which doesn't typically do that. So we're going to go to the new company file here and we're going to say start the quick start. So we're going to have a quick start option on our new company file. And we're just going to set up the same data here. So we have guitar lessons and equipment. That's our company. We're going to choose the industry that we're in. We want to have a product-based industry here because we want to be able to track inventory items. That's going to be our goal. So we're going to say OK. And the business type that we're going to have is a sole proprietor. So same information as we started with when we first started the company. We're going to create the company file. Now, note that once we create this company file, it will create another file that we got to save somewhere. We got to know where it's at, and we got to keep it separate from the company file we're using to keep the bookkeeping, to keep the books at. QuickBooks did not ask us where to put the file, so I've gone in, I've copied or cut the file, and I've put it where we want to put it. If you have questions about that, you can go to when we first created the new company file and see where QuickBooks might put the file, how to locate it, how to move it. For this presentation, I've moved it already. It's in our company files. We are in the QuickBooks data files. And now we have this new QuickBooks file, QuickBooks data, QuickBooks invoices. That's the one we want. Okay, so then we might want to change the name of it, of the file name. This won't change the name that will go on the invoice, but we might want to change the file name to something with an invoice or something like that so that we can differentiate the file that we have open from the other file or differentiate the data file we are looking at here from the one that we're actually entering data into relevant to a cash basis. This is just a file where we will be entering the accounts receivable and invoice information. So I'm just going to double click on this and open it. It is a QBW file, a QuickBooks file, not a backup file. We now have the file open, home page open, open windows open, and if we go to the view drop down, you can have open the open windows list to have the open windows open. Now what we would do is we'd have a client that would basically be saying, hey, I just would like you to create a couple invoices for me. For our example, we're going to say, hey, it's someone who sells guitars and does guitar lessons. Possibly they want help with some type of invoice, possibly the invoices when they actually sell guitar or sell equipment, and they're okay with the guitar lessons. Our goal here is to say, okay, we can help you set up the invoices, maybe send out the invoice, give you a report on them, but we're still going to be recording the cash on a cash basis when you get paid, because that's the system we have set up. The way to set up the invoice is just to create an invoice here, and then we can actually customize the invoice a bit, and we can also track some of the customers based on the invoice information. So if we had an invoice for a new customer, Smith, we can put Smith in there, and we're going to say tab, quick add, and we could add more than that. We could add the address and everything for some invoices, so we could track this with some more detail with this particular information. I'm going to minimize this part of the screen. We can also customize the template if we want to in some ways. This is just kind of a standard template that we have here, and that could be useful. It's very nice. Again, the invoice feature is something that sometimes customers will use the QuickBooks file solely for. We'd have the invoice date, so let's say 01/01/19 that we have, and we're going to say the invoice number will pre-number as we go. And then the item is something that we would have to fill out, and we can kind of do this as we go. So if I want to add a new item, so there's no items here, these are inventory items or service items. So I could just say I want to call it, let's have a quick name for guitar lessons GL, not the GL for accounting GL, but GL guitar lessons. And we're going to say, okay, set that up. And it's going to be a service item, guitar lessons, because we're not selling inventory. And we're just going to call it here guitar lessons. And we'll say that the rate is $100. We have to sign an income statement account to do this. And now again, we have to do this to set up QuickBooks, even though we're not using this for income tracking, because we're doing a cash-based system. So we're going to put it to sales and say, okay. Now, if we do that, then we're going to say quantity 2. Let's say they spent 2 hours, $100. There's going to be the invoice. If we were to look at it, then we can go to print, and we can preview. And this is what the invoice would look like here that we can then give out or send to the customer. So if we want the billing address, we can add the billing address here, of course. But if we're going to email it, maybe this is all we need. We can also add our address into the system when we set up the company, the customer address or the client address, and that would show up here. And that's going to be our information. We can also customize this template. And what's also nice is I can email it straight from here. So we can actually send it and email it as we go. And we can email it to multiple addresses straight out of the system. So it'll go from our email to multiple addresses, or possibly go from a client email address if that's what the client would like. We can say basically put the client email address here and the multiple addresses here that could include the client email address as well, right? We can say this is their address and then email it to them so they can see that it went out as well as the customer. So a couple different options for actually creating the invoice. If we save and close the invoice now, we're going to say, I'm going to uncheck this, save and close. Then what happens on the report side? We're not generating these reports for use, but just see what happens. If we go to reports up top and we go to the profit and loss for 01/01/19 to 12/31/19 for the year, there's 200 in sales. Now again, if we entered that into our system, it wouldn't work because we're going to record that sale when we get paid on it. So we don't want to record it at this point in time. We want to record it when we get the money because we're using a cash basis. And then if we look at the balance sheet, we're going to go here and say the balance sheet as of 31/19, let's say the end of the year. There's the 200 in accounts receivable, which is an accrual account. So we don't even see accounts receivable on our cash basis system. So in other words, if we go to the home tab, what we really did is we entered an invoice. Then we're supposed to receive the payment when he gets the check in the mail, when the customer gets the check, and then we deposit it. Under our system, we're waiting until we get the deposit and recording it because we're recording everything from the bank. That's why we can't really do the cash-based system and this system in the same program, because we're kind of skipping these steps along the way. And in order for us to match them up, we'd have to change our system in order to do that, go away from a cash-basis system. Now, one other thing just to point out, that when we create those items for the inventory items, you find those under lists and under items. If we add a few more items here, it'll make the invoices standard. So in other words, if I was to go down to the bottom, this drop up, and add a new item, we did this when we created the invoice, so you could do it just from the invoice. But if you have the items listed here, then you can make the invoices pretty easily. So we'll say a new item. We're gonna call this one an inventory item. So now it's inventory, and it's a little bit more complex, this setup. So we're gonna say that the item name is going to be, we'll just call it a GIB, and this is going to be a Gibson. It's a Gibson guitar, and that'll go for the description. And then we could put the cost and the sales price. How much did we pay for the guitar? So we could say, you know, if we paid like $400, and then it goes to cost of goods sold, and then the sales price is we're going to sell it for $550, and that's going to go to sales account. So I know I did that quickly, but I'm just going to give you an idea of a little bit more complexity with the inventory that we would have and how that would basically be set up, why that might be useful. And then if we say OK, it'll set up the inventory. And if we do one more, I'm going to set up one more inventory part, and we're going to say this is inventory, and this is going to be an Epiphone. So we'll give it an Epiphone, and we'll say it's an Epiphone here. And let's say that we're just going to abbreviate it up here, Epi. And that's going to be, let's say it's 440 cost, and we sell it for 600. Sales, just making these numbers up. And so if we do that and say OK, then if we go back to the home page and we make an invoice, we could start to standardize these things. We can say, okay, this is going to go to Eric Music, add the customer, and then we're going to say, what is it? It's either service, that we did some guitar lessons for 3 hours of guitar lessons, and during those guitar lessons we sold them an Epiphone guitar. I don't have any in inventory. We're not really actually tracking inventory. We're not doing purchases. So we're going to say one of those, and then it'll actually calculate the total. Now, as we do this, you have to deal with sales tax and other kind of things. If there's sales and usage tax, if you take on this kind of item, but at the very least, we can kind of make the invoice for us, save and close it. And if it's a service company, probably don't have to deal with the sales tax, but just that would give us an example of the inventory items. And then we would have that. And then again, the reports for the balance sheet and income statement don't help us too much. If I go to the profit and loss, reports, company financial profit and loss, and we go to 010119 to 013119, you'll see we now have the sales item here, and we now have the cost of goods sold. Now again, when would these things take place if we sold inventory under our system? Not at the point we sell it. It would happen when we got the money. We would record it as sales, cash basis, sometime in the future, and we would already have recorded the cost of goods sold when they purchased the guitar. So if we double click the cost of goods sold, we're not going to record this 440 when they sold the guitar. We're going to record the 440 when they paid for it, whenever they paid for that, because that's when the check would clear the bank system under a cash basis. So just note the difference between those two. If we're waiting till it hits the bank, then we probably paid for the guitar before we sold it, of course, and we would be under that method recording cost of goods sold at the point in time that we paid for it, which isn't the proper method under an accrual basis. This would be more proper, but just note that if we're trying to pull everything from a cash basis, that's going to be the difference that we have. Now, the one other thing we can do here is we could go to reports up top, and we can go to customers and receivables, and we can look at the AR aging or the customer balance detail. And we can provide the client with a customer balance detailed report, which will at least give them some idea of when the invoice went out. We can't really record the payments received against it, because to do that, we would have to see it clear the bank statement, as we'll see under the cash basis. But all we have to go on is the amount to try to match these things out. And we probably don't want to commit to trying to go through that work to match them out, because it's possible that like multiple deposits went in at the same time or something like that, and we won't be able to match them out as easily as you would think possibly. So we might be able to say, hey, look, we'll create the invoices, we'll give you a list of when those invoices went out, and you're basically going to have to track when the invoices were received on your side to track the outstanding receivables, and we'll just keep on doing our business on a cash basis when everything clears the bank. So that's one way that we can kind of help out with at least the invoice creation there, and do some tracking of the accounts receivable or provide some of that information. The next step we'll take a look at is just to do the full service accrual-based system with regard to the receivables only. For more accounting information and accounting courses, visit our website at accountinginstruction.info.